Welcome to our training on flood insurance basics, part of our winter virtual training series here. And I'm Ceil Strauss. I'm the state floodplain manager, and Gary Bennett. Gary, you want to go ahead and introduce yourself?
Sure. Good morning, everybody. Gary Bennett. I'm a hydrologist with the DNR Floodplain Program. Work closely with Ceil here at St. Paul.
Great. And Gary will be handling watching the chat and logistics here.
Yep.
So
I'm behind the scenes today.
that's right. That's right. So appreciate everybody joining us today. This is one of the trainings that we give each year. There's enough little changes each year to help keep people up to date. And just there's always new folks coming. So we try to offer a few of the different topics each year. And let's get this here. So we'll start off talking about participating communities, review a few terms and of those acronyms and map zone information. And I'm going to go ahead and turn off my camera, help keep the bandwidth good here. But we'll be spending most of the time talking about those flood insurance basics and the kinds of things that go into determining the premiums and other questions that come up. And I do want to point out that we've taken quite a few slides that were originally in FEMA presentations and have incorporated those. And most year, the last couple years here, when I've been giving this training, I've had James Sink, our FEMA regional flood insurance liaison. He's a RIFL, so yeah, regional flood insurance liaison. And he ended up having a conflict at the last moment, and the other FEMA folks weren't able to join us today. So if we have questions that Gary and I can't answer, we will probably have some things that we'll be reaching out to FEMA separately after the training here. And along those lines, we are not speaking on behalf of FEMA, and there are things that are happening at the national level, and we don't know what impacts some of those things might have. So we'll be sharing information as we get it on any potential impacts. But before we go on to some of the details about flood insurance, let's talk a little bit about the history of the program. The National Flood Insurance Program was created by Congress in 1968. Part of that was that in 65, there was a really big flood in Minnesota impacting the Mississippi River and the Minnesota River areas and much of the middle part of the country with the Mississippi River. That was when Congress said, okay, let's look at a different way of working with flooding and preventing flooding, and created the National Flood Insurance Program. The NFIP is a voluntary program. If your community enrolls in the program, it makes that federally backed flood insurance available to anyone in the community. And as we'll discuss more, anyone in the community can get a policy. You don't have to be in the mapped flood zones. But FEMA does like to refer to it as a three-legged stool, because part of it is looking at floodplain management, that we're going to look at where people are building new things and doing grading and making changes in the floodplain. And we're going to regulate that so that we're not increasing flood damage potential for others. And we've got the risk map aspect, the identifying the areas we know are more likely to have flooding. That's the FEMA mapping aspect. And then what we're focused on today is the flood insurance. Before that, it was hard for private companies to stay in business because they couldn't spread their risk around the country. Whereas in 68, when the program was started, it did make the flood insurance available nationally, spread out the risks, and you have a federally backed product there. So here's a banner that was in St. Paul, put there by the folks that were overlooking where a new development was going in that was right next to the river, and making comments on the fact that it was a lower area, it is a lower area, and they've got higher risk. But let's talk about the NFIP myths, and we'll be getting into more detail on some of these throughout the presentation. but at a higher level, some of the myths that we hear. The first one is that you can't buy flood insurance if your property is flooded before. And that's not true. Unlike other types of insurance, they can drop you after you've had a couple of claims due to tornadoes or fires or whatever. But for the flood insurance, they will start to reflect a higher premium after you've had a couple of losses, but you can continue to get flood insurance. They don't drop you because your property's flooded before. Another common myth that we hear is that you can't buy flood insurance if you live in a high risk zone. And that is absolutely not correct. That as long as your community is in the National Flood Insurance Program, you can buy flood insurance no matter what zone you're in, including in that high risk zone. And then another myth that we hear is if my property does flood, it won't cost that much to recover. And FEMA does have this little tool here that gets into the cost of flooding. It talks about how even if you get an inch of flooding, especially on that main habitable floor, it's a large amount that it costs to repair and replace the things that are damaged due to flooding. Kind of the flip of the earlier myth that you can only buy flood insurance if you live in the floodplain. And that is definitely not true. That's what one of the myths we probably hear more commonly is people think if you're outside the floodplain, you can't buy flood insurance. And that is not true. That if you're in a medium risk area on the FEMA maps or in the lower risk areas, there may be local risks that FEMA hasn't mapped, but you know of there locally. And it's a good idea to get a flood insurance policy in those cases. And you definitely can get flood insurance if you are living outside that mapped floodplain. And I know that happens because when I started with the floodplain program, I asked my insurance agent what it would cost to get a flood insurance policy. And he said, well, you can't get flood insurance because you're not in the mapped area, which is not true. And I've heard that from many people that their agents have been misinformed and told them that they couldn't get flood insurance when they weren't in the floodplain. Another common myth is that people don't realize that their homeowner's insurance won't cover flooding. Homeowner's insurance may cover like a burst pipe or some things within the house, but if you get flooded by flooding coming over land, either because the river got high or you had a really intense flood or rain and the runoff was running over the ground and went and flooded your building, that will not be covered by homeowners insurance, except in unusual cases. Typical homeowners insurance doesn't cover that kind of flooding. Flood insurance is only available to homeowners. That is not true. You can get contents only coverage if you're a renter. You do have the option to get flood insurance. Unfortunately, very few renters have coverage. We have very few contents only policies in the state, and there's a fair number of people in the floodplain that are renters. So that's definitely an underserved community there. And then people think, I don't need flood insurance because if there's a disaster, FEMA's just going to be there handing out money to everybody. I hear about FEMA being at floods and giving assistance to people. Well, that's a myth because, first of all, only a small percentage of floods get a federal declaration, and an even smaller percentage get a federal declaration for individual assistance. And it's individual assistance declarations where homeowners and businesses can get assistance, but they don't get much assistance at all. They might get a few $1,000s to help them have a place to live for a few days while they're getting things cleaned out in their house. But first, they're looking at loans for people. And only if you're not eligible for loans, don't have flood insurance, that do you get some aid from FEMA. And we will have a couple more slides about that later on. So going into a little bit more depth on many of these topics, who can buy flood insurance? Any building owner or renter in a participating community. and anyone within that community, all the flood zones. And a reminder that homeowners hazard insurance rarely covers flooding damage. It might cover like some broken pipe type things within the house, but the overland flow, the flooding from from different sources like that is not covered by typical homeowners insurance. So who's in the National Flood Insurance Program? In Minnesota, it's all of the counties that do zoning and many of our cities. We do have a few hundred smaller cities that are not in the program. We do point out that over 96% of the state population's in a community that is participating. So we've got pretty darn good coverage in the state. And if you want to know if your community or one of the cities in your county is in the program, you can use this link and look at the community status book. And it is alphabetical by community name. Point out that it does also show the effective map dates and when the community entered the program. I do want to point out under the map information, you'll see an NSFHA. That stands for No Special Flood Hazard Area has been mapped in that community. The other thing that people will wonder about is this E, and that is a community that's in the emergency program. And we don't have very many communities in the emergency program, so I won't say a lot about that, but it's good for communities to know when they're in the emergency program. In general, they're going to be in our paper map or no map counties. The other thing that's in this list is the notes whether a community is in the community rating system and what the discount is. I won't get into a lot of detail on the community rating system, but want you to be aware it is a program FEMA has, and you get points for higher standards, good communication, efforts to reduce risk in general. And the more points you get, the higher your class, and the higher your class, the bigger discount you get for people in your community for their flood insurance. And it used to be that discount was only for buildings in the mapped area, but as of a few years ago when FEMA updated the NFIP rating system, they started applying that to all of the properties within the community. Although those that had a discounted policy to begin with, they're on a glide path and they won't actually see that discount until they're at the full risk rate. The community status book does also have a list of communities that have FEMA mapped risk, but that are not in the program. And we encourage all communities that aren't in the program to get in the program, but especially those if you've got mapped risk areas. So talking about the mapped risk, what does that look like? On the newer maps, it's going to be this light blue area and the hatched area. And if you've listened to our other trainings, this is the flood fringe and the floodway. But for today, we're talking about what's the special flood hazard areas, the general term FEMA's using and lenders are using when we're talking about flood insurance and lending. So the special flood hazard areas, the zone A, the different kinds of A zones. In this example, it's a detailed study, an AE with elevations on the map. And so it does include that floodway and the flood fringe. And if you're in an area where we don't have floodway mapped, it's all going to be that light blue area. It's the special flood hazard area. The map does show medium risk area, but in those areas, you've got that information. You might be having higher standards, keeping critical facilities out of there or using it for other planning purposes, but the mandatory flood insurance does not kick in there. And this does point out that this is the area that communities must regulate. And this is the area where if a building is in or touching this area where the mandatory flood insurance kicks in if you've got a federally backed loan. And that's most types of mortgages and secured loans. On the older maps that unfortunately some of you still have, the high risk area, the special flood hazard area is the dark shaded area, including the floodway if it shows a floodway. And again, you've got the medium risk area. It's good for planning purposes, helping reduce risk there, but that is not mandatory flood insurance there. We'll use similar terms here. We talk about the 100-year floodplain or the 1% annual chance floodplain. We try and not use the term 100-year all the time, but that's what people understand. But we try to not use it because we don't get floods once every 100 years. There are other frequencies are available where we've got mapping and more data, but for the mandatory insurance requirement, we are using that 1% annual chance flood. And here's some of the other terms I've already been using. FEMA will also call it the base flood elevation, or BFE. In Minnesota law, we'll call it the regional flood. But for insurance, we're going to be focused on the term special flood hazard area, or SFHA. So is it in a floodplain for zoning or for mandatory flood insurance? In this site, this is showing the FEMA mapped area, and this house, even though you can see it's really high, it is in the FEMA mapped area, and a lender must require them to get flood insurance if they've got a federally backed loan. Whereas this building over here, they're officially out of that area, at least on the current maps. In the future, when the maps are made more accurate using that elevation data, they'll be shown in the floodplain. But right now they're out, so they won't have mandatory flood insurance. But those of you who have seen our trainings on our regulations and have worked with the regulations in Minnesota, you know that we've got rules that say if it's adjoining a FEMA mapped area and the site is below the base flood elevation, your ordinance is regulating that building and making sure that they're building safely. But for folks like this that are on a high spot, they will be required to get flood insurance unless they get a FEMA exemption, basically a waiver. And let's talk about that a little bit briefly here. So in this example here, you can see this building, this whole parcel is not touching the floodplain. Sometimes lenders will send out letters when there's new maps and say a place like this is required to get flood insurance because they're using some kind of a buffer. They're using, computer overlays and looking at that. But this is an area that's, clearly not mandatory flood insurance. Here's an example of a building that if you look closely, you can see that there's space between the building and the mapped area, but there is mapped floodplain on that parcel. And that's a situation where the lender may say, hey, you have to get flood insurance. But if that person looks closely at the map, they're actually out and it's not actually mandatory flood insurance. But this one, it's just nicking the building. It's not hitting it a lot, but it is touching that building, and that lender must require flood insurance unless they've gotten that waiver there. So if the buildings are actually high, there is the option to get a letter of map change. And we've done separate trainings on this when we talk about FEMA map basics. We talk a little bit about letters of map change, and we've got an older one of our virtual trainings that we go into more detail about letters of map change in general. But a LOMA is when the natural ground is actually high and you submit that information to FEMA and they say, yep, we agree that's high, and you're officially not in the floodplain and you don't have the mandatory insurance requirement. And out as shown would be for that house that's close to the floodplain but not actually touching it. FEMA issues a determination agreeing that, yep, that building's not in there, it doesn't have the mandatory flood insurance. Letter of determination review is an option, but it's not a great one because you have to pay and you don't end up with that actual waiver. It's more of a, does FEMA think it's the building's in the floodplain or not? Kind of a chance to argue with the determination the lender has made. But then a letter of map revision is similar to a LOMA if it's a letter of map revision based on fill. But they've brought in fill and they've elevated, and FEMA will give the mandatory insurance waiver there because they've reduced their risk. back to talking about more about the insurance coverage. For the regular program, which is what most communities in the state have, you can get up to 250,000 in coverage for your building and up to 100,000 for your contents. You have this increased cost to compliance, which I don't think we get into much detail about, but basically it's treated like a rider on your insurance. And for a building that was built before current regulations, if it is substantially damaged due to flooding, you can get up to $30,000 additional claim to elevate your building or move it to a higher part of the site, or if it's a non-residential building, to do some forms of floodproofing that are allowed. For the non-residential buildings, they can get up to 500,000 in building coverage and up to 500,000 in contents coverage. And they can also get that same increased cost compliance funding for if they are substantially damaged due to flooding. Those in the emergency program, they have a lot smaller amounts of coverage that they can get. That's the main difference for those communities in the emergency program. And heck, I just updated the number here in the slides, and we're down to just 12 emergency program communities in Minnesota because they do go away. They become regular program communities as we get digital maps. So down to not that many. This is something that again gets into the different forms and different kinds of coverage depending on if you're residential or you're more of a business or non-residential building. And then like condos and those situations, there's this RCBAP, and I don't know much about that. If you've got any situations that come up that are a condo situation, they're not a business, they're not a residence, we'll definitely bring in FEMA staff to help explain the situation and answer questions about that. And this does mention group flood insurance policies. There's some special conditions there. That's policies that when there is a disaster and individual assistance is given to folks, they have to carry flood insurance going forward as a condition of getting that individual assistance. And they are given a 3-year insurance policy that they call the group flood insurance policy when they get that individual assistance. So those of you who have had disasters, especially here in 24 where we had individual assistance, you might hear of some of your residents getting this group flood insurance policy, and that's what that's about. So how long do you have to wait for a policy to be effective? Normally, if you just say, hey, I want to get a flood insurance policy, that would normally be a 30-day wait. But if you're just closing on your mortgage there, your loan with that mortgage, it's effective right away when you secure that loan. If you've got new maps, and we've got quite a few communities that have gotten new FEMA maps, the digital flood insurance rate maps in the last year, folks in those communities that are in those counties actually have a 1-day waiting period if they go to buy a flood insurance policy. For 13 months after the date of the new countywide flood insurance map. And then there's some post-wildfire exemptions, and that hasn't been an issue for us. If we do have wildfires and issues, we'll get the word out about how that works. We've been talking about floods and what's the floodplain for regulations and for the mandatory insurance requirement. But for what's considered a flood for making a claim is different. And this is an old cartoon I've been including in here because it is a little confusing on what we consider a flood for making claims. So basically, in the official rules there, it says it's that general temporary condition of partial or complete inundation of 2 or more acres of normally dry land or 2 or more properties. So in cities, that's usually going to be the 2 or more properties. Also, just note that city right-of-way or community right-of-way, it can be one of those properties. So if a house is flooded and the street in front of them's flooded, that will be considered 2 or more properties. But the most typical kinds of flooding we see that are considered floods for the insurance purposes would be the river or the lake gets flooded and it increases in elevation and it spreads out and it floods buildings. Very common to see that. That's the most common type of flooding. That's what people tend to think of. But it also can be what they call this unusual and rapid accumulation, that should say, of runoff from any source. So that's your really intense rains. If you get a 10-inch, 12-inch, 14-inch rains, we've seen that in Minnesota. If you get a huge rain like that, they can't infiltrate, it can't soak into the ground fast enough, and you get a lot of flooding. Then sometimes it's called pluvial flooding or urban flooding, and that is definitely something we're seeing being a bigger issue. Some of the other states in our region have had big floods, and like 80–90% of the folks were outside of the FEMA mapped areas, because the FEMA mapped areas really focus on those rivers and streams and lakes, the that kind of flooding. Whereas more of the flooding we're seeing as time goes on is that intense rain. There's also situations with mud flow, and if we get into that, we'll talk about it more with the community. That's a lot less common. And mud flow is different from a landslide. Landslides are not covered. So if you've got an unstable, steep area that gets oversaturated, boy, in 2014, we had a lot of these kinds of things, but that comes down and landslides can be very devastating. This picture is a good example of how devastating they can be. And unfortunately, flood insurance doesn't cover that damage. So when we talk about the coverage, what does get covered? You've got building coverage that's separate from contents coverage. And the building coverage is, it's the building. It's basically what stays with that building if you sell to a new person. It's the foundation, the walls, anything that's attached. It includes that furnace, water heater in the basement. And it does include up to 10% of the claims can be made for the main detached garage or building like this. The contents coverage is all your stuff. And on the upper levels, it's pretty broad, the stuff that's covered. In areas that are below grade, in a basement, or if you're in a split level that's partly below grade, it's going to cover very limited stuff in the basement, but it does cover your washer, dryer, freezer with food, and a few things like that, but it won't cover your stuff in the basement. The other thing I want to point out is that it doesn't cover sewer backups or sump pump backups, and that is something you can get as a rider on your home hazard insurance. So that's something, another education point is making people aware that in many places that's going to be a really good idea, and it's not super expensive on your homeowner insurance. Also, this reminds me that often if people are told that flood insurance is mandatory, they get the building coverage and may or may not be told that they have to get contents coverage separately. And after the big floods, we hear from lots of folks that, oh, gee, I had flood insurance and they're telling me it doesn't cover my stuff. And they're shocked to learn that they didn't have contents coverage. So another area that we do try to educate on, making people aware of that, because when I was able to look into the details of the kinds of coverage people have, I saw that many of those policies in the special flood hazard area only had building coverage and didn't have contents coverage. We have very few contents only policies in the state also. So we've got a huge number of renters in the state, very few flood insurance policies for renters. So this slide gets a little bit more into what's generally covered and lists these kinds of things. And I mentioned most of these. Debris removal, that that there are some things related to preventing damage. So debris removal is mentioned here. Also, if people do like sandbagging or putting up temporary structures to prevent the flooding, that's an area where you can make a claim. It's not a huge amount of money. I think it's like up to $1,000. The FEMA folks would know the details more, but that's one of the areas where they don't charge the deductible, is if you took action to prevent worse damage to the building. But other things are not covered by the flood insurance. So like if you leave that building wet and don't get in and clean stuff up, that mold mildew is not covered. And then some of these other things that list, things that are outside and separate, of course, don't get covered. The living expenses, that if you need to move someplace else because your place is really damaged, the standard flood insurance does not cover that. I will mention that there's getting to be more private policies available. Some of them will have that coverage in there. So this is a little chart of how to file a claim, and I'm not going to go into detail. This again will be in the slides that we share, but it does have some nice links here. But basically, you're starting the process with your agent. You can see if there's opportunity for advance payments. You want to be taking a lot of pictures, documenting, working with the adjuster. Again, documenting that loss, signing the forms, and then receiving the payment. And no, your flood insurance doesn't pay if you're flooded with junk mail and catalogs. Okay. Often people think, hey, if there's a disaster, I'm going to get disaster assistance. And I did mention this briefly earlier, but the disaster assistance is very limited that you'll get. You can make a flood insurance claim again if you've got overland flooding and if you've got 2 or more properties flooded or 2 acres or more in a rural area. So it doesn't have to be a big flood to be, but it could be impacting your building and you can make a claim. Whereas disaster assistance only kicks in if it's a really big flood. And most common, as I mentioned, is the public assistance, individual assistance before last year. The last time we had individual assistance was for a flood in Waseca in 2016. Before that, it had been quite a while before we had a flood big enough, because what they do is they look at the value of the damage to homes and businesses. And we've done a good job of reducing risk in Minnesota, and many communities have done a wonderful job buying out properties, doing flood control projects, reducing that risk. The disadvantage there is that for those who are damaged, they're more in the minority now, and there's just not that many buildings that have damage, so we don't hit the trigger to get individual assistance. And even if we do have an individual assistance declaration, they first look at, do you have insurance that covers it? Are you eligible for an SBA loan, a Small Business Administration loan? And those go to not just businesses, they go to the residential properties also. And so first they see if you can get a loan, which of course you have to pay back. And then if you're not eligible for those, then you get small amounts of money. It's not a lot. The maximum they can give if you've lost everything, it was $42,500 in the flood last year. But the more typical amounts people see is more in that $5,000 to $10,000. So definitely not a lot of coverage. This is just showing that there's been a lot of federal disasters throughout the state. This is a little dated now. We probably should get it updated because we've had more disasters since then. But every county has had multiple disasters involving floods at some point in the past. And this is just illustrating the cost of paying for flood insurance on a monthly, or this is yearly, I guess, basis versus the cost of repaying a loan if you get that SBA loan during a disaster. This is showing the average individual assistance amount versus the average claim people got for flood insurance. So I've got the Minnesota situations shown here, and many of them haven't even had any individual assistance. They don't have that little box next to it. So you go back to this one, and there's the individual assistance compared to what people got for flood insurance, or this one. So how do the policies get rated? FEMA, and I'm not supposed to be calling it risk rating 2.0 anymore. It's been here since 22. In April of 22, all policies and renewals are using the new system. FEMA prefers we call it the NFIP rating system, but my slides probably still refer to risk rating 2.0 quite a bit. So what changed and didn't change? We're still using the flood insurance rate maps to determine if it's federal mandatory purchase or not of the flood insurance, and for floodplain management. The annual premium can't increase more than 18% a year for homes for primary residential structures, or 25% a year for like second homes and businesses. And that was set by Congress in 2014. So that's still there, even though there's new full risk rates. The people who had discounted rates before, because they were discounted because they're a pre-firm building. They were built before the first map in the community, or they had what's called a preferred risk policy, which was a discounted policy. They're on a glide path, typically at the 18% increase a year. And so some of them will take probably 10 years to get up to what the rate would be if it was a new policy and using the new rates. Let's see, still discounts for communities that are in the community rating system, but now it applies for all the buildings, as I mentioned, not just those in the mapped areas. The other thing is that you can, if you had that better rate, if you had that preferred risk policy or that other kind of discounted prop policy, you can get those transferred to a new owner. And there's still a bunch of the fees and surcharges. So you'll look at the premium, and then they'll add a bunch of other stuff. There's something called the HFIA surcharge, the Homeowners Flood Insurance Affordability Act. They added a surcharge for residential of 25 and 250 for non-residential and second homes. And there's a reserve fund assessment, 18% in most cases. There's a policy fee, and I can't remember what that is. It's under 100, but all these things add up. And then if your community has been put on probation, there would be an extra surcharge. Right now, we don't have any communities on probation. So again, in the old system, they would look at the map, and if you were in that high risk area, they used a bunch of tables to figure out your rate, and they would look at how high that building was relative to the flood elevation. Now they don't use these maps. They just look at each individual property. And it used to be that if you were in that high risk area, you were required to have an elevation certificate. Now, even if you're in that high risk area, you're not required to have an elevation certificate. But as we'll mention later here, the elevation certificate usually gets you a better rate. Oh, and this is my reminder to mention that lenders, while there's a federal requirement to require flood insurance if you're in the high risk area, the lenders have the prerogative to require it. They're taking the risk giving that loan to that property. So some lenders might require flood insurance in the 500-year or other areas, but it's not a federal requirement. And this was this preferred risk policy we used to talk about, and the premiums range from like 200 to 700 depending on how much coverage they got. Those have gone away as of a few years ago. So those are the ones that they're going to take a while to get to full risk rates because they're taking 18% of this 200 to 700 a year, and 18% of that is not a ton. So some of them are probably on a 10-year or so glide path. So what are they using now? Okay, in the past, those main things that I was talking about, what zone were they in? What's the flood elevation? Also, they would look at, do you have a basement? How many floors do you have? That kind of stuff. And then they would require information on elevations if they were in the flood zone. Now we're looking at a whole bunch of different things. All these different things, I'll get into a little bit more detail on some of these, but just be aware that they're looking at a lot more. One of the biggies is the distance to the flooding source, and whether it's riverine or that pluvial, that kind of urban flooding that you get from the big storms, or they now also look at distance from the Great Lakes. Certainly on the coast, whether the flooding source is coastal makes a big difference in the premiums. But what they do is the agent will put basic information into the FEMA system. They've got this behind the scene rating engine that takes a bunch of factors into consideration. You do look at the value of the building and the type of construction and a couple things that the agent can enter, but a lot of the factors and the rates are behind the scene. So whereas in the past, I could look in a table and say, hey, if you're 2 feet higher, it's going to be this difference in your premium. And we can't do that anymore. They use a lot of big data. But the good news is that we don't have the big cliffs. That it used to be someone who's just inside the floodplain would have a big premium, and someone who's just outside would have, they could get the preferred risk policy, that cheaper discounted premium. And now these neighboring properties will be treated more similarly. So for some of these folks, they had some nice decreases with the new system. It was fairer for them. But for many of our policies that we've got in the state, because we've had previously like 65, even 70% of our policies were those discounted policies in the past. So again, in the past, we looked at the comparison to the base flood elevation versus the lowest floor. Now they look at what's that lowest adjacent grade, the lowest ground touching the building compared to the first floor above the lowest adjacent grade, the first above grade floor. They will look at the elevations and what's considered the first floor. Here's an example. If it's a slab on grade, it's pretty obvious where that first floor is. If it's up on pilings, it's obviously up here. But FEMA has different types of building options that the agents will use to rate the buildings. But then you can include the elevation certificate. So you have them use this behind the scenes, big data driven rating engine, or you can submit an elevation certificate and they will take whichever is better. If your elevation certificate gives you a better rate, they'll use that. If it doesn't give you a better rate, they'll go with that rating engine determination. So here we're talking about that elevation certificates are still really helpful. They can be even used in the lower risk zones. You can use it in any of those zones to help you maybe get a better rate. You still need surveys to get a letter of map amendment there to get that waiver for the flood insurance. And if you're a CRS community, you're required to have folks use the elevation certificate to document that they built correctly. So there's Section C of the elevation certificate that's used to show those key elevations. If it's filled out by a professional engineer or a licensed surveyor, and there is a new Section H where people can actually measure distances. The homeowner can do that, or anybody can do that. It doesn't have to be a licensed surveyor. I haven't seen any good data on how much of a difference that makes, but it is an option in the 23 update of the elevation certificate. And yeah, Gary and I gave a training on the new elevation certificate back in like October 23, and that video's on our website if you want to learn more about the elevation certificate. Oh, here, I've got the date right here. So one of the factors is the cost to rebuild. That is something that will be determined as part of the rating engine, but there's some options for the agent to enter that information. But one of the things that changed from the old system to the new system is it used to be the first 60,000 of coverage they had a much higher rate, which as part of making it fair here, in the past, the smaller, less expensive homes were paying much more relative to the overall coverage that they were getting versus someone who had a very expensive home. So like here, this is the old table that's showing that for the first, the point of this is showing that that first number is much bigger than the second number. And that first number was the rating per $100 of coverage for the first 60,000. So bottom line, the new policy ratings are more fair in terms of not having lower cost buildings paying a much higher percentage, basically. Prior claims are included now that hadn't been considered in the past, but it is a 10-year rolling window, and they don't include losses that were those loss avoidance claims that they did something to prevent the flooding, or the increased cost of compliance claim payments, because those come out as a separate payment from their main claim when their flood happens. And if it was closed without a payment, there's some situations someone makes a claim but they don't actually get a payment. And I won't get into detail on this, but just be aware that they are starting to consider previous claims again in that 10-year rolling window, whereas in the past they didn't. They do consider, when they're doing the calculations, they're looking at a lot of different flood frequencies. So they're looking at, gee, does it get impacted by a 10-year flood or a 25-year flood or a 500-year flood or a 1,000-year flood? So they are looking at more things. One thing that is still not too fair right now is the way that areas behind levees are treated. And it doesn't make a difference if they've gotten a letter of map revision. And that's something that we're discussing at the national level. The mandatory purchase requirement, if they've done a letter of map revision, they're showing that area protected. So they won't be required to get a policy, but we want to encourage people to get those policies. And right now it's more expensive than people think it should be in those areas that have been protected by projects. So a few things that you can do to reduce the risk are elevate your utilities, install openings, choose different deductibles, or look at the amount of coverage that you think you would need for the kind of flooding you would expect in your situation, or provide an elevation certificate. And again, community rating system. If you got a lot of policies in your community, good thing to think about. Or even just if you're doing a good job and want to show you're doing a good job is another reason people get in the community rating system. Here's a little bit more about the community rating system. Again, all the policies now get the community rating system discount. And our highest rated communities like Austin and Moorhead, I think, is up there. They get a 25% discount. Even just getting into the program at the lower level, you get a 5% discount. So a couple things that FEMA mentions that you can get discounts for is if you've elevated your machinery and equipment. Can't be in a basement. It's got to be up a level. Problem is that if you only have a one level building, you've got to basically put equipment in the attic, and that's not realistic. So that is something at the national level we've been discussing, that, gee, you should be able to get credit for doing partial elevation, not to the attic and things like that. The other thing is that if you've got flood vents, you can get a discount. You don't get much of a discount unless it's like a full level tuck under garage type of wet flood proof design, but you do get a little bit of a discount for that. And I think I'm ending here talking about a new do-it-yourself quoting tool that FEMA came out with. They issued this just like last November. So again, when you see the slides, you can go check out this site if you haven't already. I did in one of my emails that I send to communities talk about this site. Before you start, you're just going to be entering your address, noting if primary residence. But before you start this, you need to, it'll ask for your square footage of your home and the year built or date built. So you enter your address, note if it's a primary residence or not, and then you'll get this screen, and it'll ask you, what kind of building do you have? And you can select if you're single family or one of these other options. And then it'll take you to what kind of foundation do you have? Is it slab on grade? Do you have a basement? Are you up on piers? And you click the one that's applicable for you. And then it'll ask what kind of construction do you have? Do you have a wood and metal frame walls, which is probably most of the houses in Minnesota, or is it all masonry? Or is it some kind of mix? And then it'll ask you, what's your square footage of the building? What was the date it was constructed? They make you put the month and day in there, which of course most of us don't know. So you probably have to make up a day. I know when I entered it, I just put June 30th because I didn't know. I know my house was built in 1976. I don't know what day. Number of floors, not including the basement. And if it's slab on grade, they'll ask you another question about where your equipment is. Is it up in the attic or not? Or is it up a level? Then it asks you what kind of coverage, how much you want in coverage, and it'll ask you what deductible you want, and then you'll get a quote. Folks at the Association of State Floodplain Managers has a group that's been reviewing and providing comments to FEMA on ways to improve this tool. I'm actually on that group, so if you have comments, let me know. I'll be sharing them with that group and with FEMA. But one of the first things that we pointed out to FEMA is that we'd like to see a way to actually enter elevations, both to show information you might have in an elevation certificate, and because we want to be able to have people look at, gee, if I build it at this elevation, my premium is going to be this much. But if I elevate and I make it safer, not only will I be safer, but how much will I save in my premium on my flood insurance for a year or per month? So that's something that hopefully FEMA will get added in the not too distant future. There is a discount guide that talks a little bit about some of those discounts. I got a link to that. One of the ones to mention is if it's newly mapped, there's a nice little discount for the first amount of the building coverage, the first 35,000 and the first 10,000 of contents coverage. And if it's an older building, it was built before the first FEMA map, there's a discount for, again, that first portion of the coverage. And as I mentioned earlier, the annual increase can't be more than that, 18% for primary residential, 25% for the non-residential or second homes. Oh, I guess this is the last thing I'll be talking about is FEMA has something called the National Violations Tracker. Basically, they look at violations that have come from, that we found when we've been doing our community assistance visits or community assistance contacts, violations that are found when people apply for a LOMA or a LOMER F, a letter map revision based on fill, or if someone applies for the bigger map correction or update called a letter map revision. In CRS communities, they have their elevation certificates reviewed, and if they find violations there. But the biggest ones were for old policies, 21 and earlier. If when someone was applying for a flood insurance policy and it was post-firm, it was built after the community had maps, and the lowest floor in that elevation certificate was more than a foot below the base flood elevation, it got put in this tracker and it's assumed to be a violation. So if it is a violation, if it's in that tracker as a violation, then they don't get CRS discounts is one of the biggies. So that only affects a few of our communities in Minnesota. Very big deal in places like Florida, where a lot of the communities are CRS and they've got a lot of policies in the communities. They probably got like 40 communities where the community has more policies than we have in all of Minnesota. Yeah, we've got about 7,000 policies in Minnesota. So ending with some resources.
No, no comments or questions in the chat other than what I put in there.
Okay. And I see talking about, the groundwater seepage. That's a good point, is that the groundwater seepage, it doesn't cover. And that's part of the education too. We want people to know what flood insurance does and doesn't cover. It's got to come over land. And I think that's it. It is. And I've got James's contact information in here. You can reach out to us, and we won't talk in this setting about individual properties.